going. That worked. That's why they're still doing well. The others are not so well. So you need to, and this is a little digression. You need to also think of alternatives to keep your business going. How are you going to keep that cash flow? And I know we didn't cover that because it's really in an upcoming series that we can think about how to keep your business going, how it makes it profitable. Maximizing your home office deductions. Now, this one is very tricky. I believe on an earlier show we talked about it is a hot item for IRS. It was years ago. Then Congress made it a little more legal. IRS backed off. Now they're going after it again. The reason being is how you set it up. You're allowed to take a home office deduction. However, that office should not be very easily used for anything other than that business. So if you have a television in there, if you have a couch, and then you can actually have people over and sit, and it's not a very good office unless you're in this type of business.
Exactly. I was just going to say that because, part of what I do is watch TV all the time. Sometimes I'm at my desk here and people will walk by and they say, "Oh, you're watching TV." I'm like, I'm watching the shows to make sure they're where they're supposed to be, and that's part of what I do.
That's right. That's right. So it all depends on what you're doing. For a business like mine, nope, should be no TV.
Yeah.
I can have a computer. I can have a desk. I should have a file cabinet. There should not be anything in there for the family to sit down, have popcorn, and watch the movies. If there is, then I might not have that deduction. So that's what IRS is talking about. With that, you can deduct along with your other expenses a portion of the rent or mortgage or some of the other insurance, some of the other household expenses. You can probably take a portion of that. There's a calculation that you use, and that's where you get into percentages. Is it 10%, 20%, 30%? Now, you're really pushing it, I believe, if you go more than 20, unless you have a daycare, because children run all over the place.
They do.
So
that's an interesting point to make for people who okay.
Daycares have a kind of exception when it's a daycare in the home because you can't just keep.
Can't say you are in that corner. This square here, this is where you are. It just doesn't work with kids like that.
That's right. Now, another thing, if you're self-employed, you can deduct your health insurance. You can deduct health insurance now. It just depends on where it is. Health insurance will go on Schedule A, and without getting too technical, there's two hurdles. One, it's 7.5% of your gross income. So if your gross income happens to be $10,000, then it has to be more than $750. Then it's subject to 2%. So it has a couple hurdles to go over. Now, if you're self-employed, it goes on to page 1 and it reduces income. So that's a really good deduction. However, if this business, if your home-based business is a side business, then it may not be if your company is providing you with insurance or if your spouse has insurance that covers you. Then you can't really take that deduction.
It's kind of like doubling up.
Yeah, you have to take it back to Schedule A. It's still deductible. It just depends on where. Now, we talked a little on mileage. Always track mileage. I have maybe 20% of my clients who use mileage who actually keep a good record of it. It's kind of a pain in the butt.
It is a pain, yeah. I used to work for this company that they wanted you to track mileage, and it was just a pain, yeah.
Well,
I wanted my money, so, after a while I did get into the sway of it. I had it, my book in my car. As soon as I sat in my car, I started calculating. Otherwise, it would just go to my head in terms of what I was doing,
That's true.
Yeah.
I had a client. We had an audit. He came to me. He was being audited. What IRS wanted to see was his mileage. He drove a lot. Covered about 3 states in his business. What it meant to him was about $10,000.
Oh wow, that's pretty penny.
So we were able to track his mileage from the repairs, from the dates that he went to see people, from everything like that. That's not the best way. A good way is when you get up in the morning, especially if you're going out, take the odometer reading, and then when you come back, take the odometer reading, and then in your appointment book, which you have anyway, you're going to note where you're going. So now you've covered that total mileage. Now also keep in mind that IRS is looking at mileage as a hot button because they believe, and is rightly so, that you don't have 100% business miles if you only have one car.
Right.
If you have 2 or you have 3, then you can. You can say, I just use this car only for business, and the other one, I drive to the store, something like that.
Because I was going to say, you're on your way somewhere and you're passing the grocery store, and you need milk. You're going to say, oh, goodness.
That happens all the time. You can probably get away with that. When I shouldn't say get away.
Well, I kind of understand where they're coming from, though, because we don't. People really don't use their car, especially if they just have one.
Yeah. So the best way then, now you've taken that odometer reading in the morning, you've taken it in the evening.
That's a good
you
plan.
now must calculate that mileage between the 2 appointments or 3 appointments, whatever, and the difference is going to be your commuting. If you're leaving, if your office is at home, then pretty much wherever you're going is business mileage, unless you're going to the store, of course. So that's something you should keep in mind. For 2010, mileage is at 50 cents. It changes every year. I think, I'm hoping for 2011, it's going to go up again because gas has gone up so much that I believe it's 51 cents is not going to cut it. So your alternative is to keep track of the actual. What are your repairs? How much gas are you buying? And that might be higher. And if it is, then you take that. You're not just stuck with mileage, and I don't want to give anyone that impression of that. You really want to take the higher of the 2.
Right.
So you keep all your expenses together and your mileage, and then at the end of the year,